All right. Well, good morning, everyone. Thomas Montgomery here. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories, and support each of you. These morning Zooms are primarily oriented for our distribution partners. Please keep in mind, and now anyone's welcome, but we do have a separate set of Zooms held usually multiple times per day for prospective clients or small business owners who are looking for funding that need to better understand how the Shelf Corp program works. So, from our topic, you and I are business developers, we're educators, we're financial literacy educators, we're problem solvers. What we're doing is providing increased access to capital as well as improved business financial literacy. Our primary offering that you and I take to the marketplace together are the fundable shelf corps. This has just been an absolute home run, if not a grand slam, since we rolled it out earlier this year. What do we know? If a client is looking for funding to start or grow a business, what is the prerequisite? What's needed? Well, they need to have a fundable business. Doesn't matter how badly they want money, doesn't matter how badly they need money, they must have a fundable business. Well, the problem starts with most entrepreneurs, they don't know what you and I know. They don't know what Gilbert, what Greg, what Jeanette, what Juan, what Kenya, we have 414 of you on. Most people don't know what you know, that there's a formula for funding. It's not a guessing game, it's not impossible, it's not a scam, but you need to be fundable. So the first thing that you and I need to do is educate people. Hey, if you want funding, you need a fundable business, and we can help assess them to determine if they currently have a fundable business. If so, great, let's go to funding. That is rarely the case. Usually they'll have some aspects, some elements, but not a fundable business for the amount of capital that they want to raise. So that's where you and I step in as the knights on white horses to be able to solve their problem. The easiest and fastest, and I think most reliable way to have a fundable business is for them to buy from you a shelf corp. That doesn't mean they have to dismiss what they have. They don't have to change what they already own, but let's get them set up on a shelf corp because why? It's ready to go to funding. It is a fundable business. Now, it's not their business, so we need to transfer it to them, but they would buy it from you as a white label partner, as a distribution partner. You would have an editable version of our client agreement. You would have taken that template, removed our information, put yours on, changed pricing the way that you want to change it, if you want to change it. The more you charge, the more you make, of course. And so from that, you get the client under contract. So that's where today's topic picks up. First of all, you determine how much you sell a shelf corp for. There's wholesale and then there's retail. Let's use an analogy. I love analogies. You probably hate me using them, but I love them. So let's say that you go into Walmart and they sell a Sony big screen TV. I don't even know how big TVs are now anymore. I guess 72-inch or maybe bigger. But we'll just say they're in electronics. There's a 72-inch Sony TV, and I'm making this up, but let's just say it's for sale for $1,000. Do you think that Walmart paid Sony $1,000 and now they're selling it to the customer for what they paid for it? No, of course not. Walmart buys it at wholesale, which is less than 1,000. They mark it up so there's profit, because if there's no profit, Walmart won't stay open, and they sell it to the customer at retail. So we sell the shelf corps at wholesale at $10,000. That's what it cost us. Unfortunately, we don't even make money on the shelf corps on the front end. We only make money after the client has raised capital, but that's a separate topic. So any of you as a distribution partner, anything above wholesale, above 10,000 is your profit. So you could sell it for 11,000 or 15,000, whatever you want. You can do the math. But what has happened is some clients, they don't have the money to pay for the shelf. Let's say they don't have $10,000 sitting around. Some people have it, but some people don't. Well, what we've been doing is allowing them to pay $1,000 down. You keep half, So they're signing your contract, your white label partner Shelf Corp contract. So they're signing the contract with you. They're paying 1,000 down to you. You're keeping half, sending us the other half, and then we've been getting them financing for the balance. How much is the balance? Well, it depends what you priced it at. But for today's discussion, let's just use the flat 10,000. So client pays 1,000 down to you. Great. You keep 500, send us 500. You're going to upload the client's contract into the portal that we provide you. And then we're going to go help them get financing offers to cover the rest. The issue, which is covered right here, the first full paragraph is, well, what do we do if the client pays 1,000 down, but then they don't get financing for the rest of it? Maybe their income's not strong enough to get approved, or their credit's not good enough to get approved, or what have you. Now, what's really interesting is, remember, in the Shelf Corp, we've tried to plan for all the problems that we could run into. So if someone has shitty credit where they can't qualify for the remaining balance, we planned to include credit. Credits improved, the credit improvement is included at no additional cost. But this is the scope of services, these bullets here on the flyer. And by the way, all of you should have a flyer. If you don't have this editable flyer, get with Madison and she'll get it to you so you can edit the call to action in the bottom. But these are the benefits that clients get once they've paid you for the Shelf Corp. So if credit is the problem and they don't have the cash to pay you for the Shelf Corp, they don't have the credit worthiness to get financing, they're $1,000 in, what do we do then? Well, we've been running into that more often than we thought, so now we have come up with a solution. And the solution has to be unorthodox because it can't be a normal solution. Why can't it be a normal solution? Well, we already have a consortium, a group of 40 different lenders that's trying to get financing for them to start with. Most people will get offers. Some people will get a few, some will get many, some will get little, some will get a lot, but they'll get whatever they qualify for. Because this is based upon them in the beginning, right? They don't have the Shelf Corp. We're not ready to go for business funding yet. We're dealing with them as they come to the table. So if out of those 40 different lenders, no one's willing to finance the balance, we had ran into a problem. Now we have a solution. So we went out to the marketplace trying to find a private lender. So a private lender means it's not a normal bank, not a normal credit union. It's someone that will take a lot of risk, right? Because what we're talking about today are for the high risk people. I don't mean that they're not good people. I don't mean that they're not deserving people, but they're high risk. When 40 different lenders all say, nah, I'll take a pass on that guy or that woman, they're high risk, but that's okay. We want to help everyone. So the private lender has set up a rolling fund. So some of these words I'm using are very important. The private lender has set aside a finite amount of money to help clients who can't get approved for financing otherwise. And that private lender is willing to finance the Shelf Corp for those individuals regardless of credit scores. So no one could have a credit that's too bad. No one could have a credit file that's too thin. No one will get refused off of credit, so everyone can get a Shelf Corp now. So what do you take from what I just said? Well, number one, you're probably asking, well, what are the requirements, which we're going to go through in just a moment. But also, I mentioned a fund. So this is not a bottomless pit of money. Right now, the private lender is willing to put $100,000 aside to fund this, and then we'll see how it goes. So if you have anyone that is wanting, well, let's start with, if you have anyone that's already put $1,000 down, which I'll go through the process in a moment, but if you have anyone that's already put 1,000 down and they did not get financing for the balance, you want to get with Madison ASAP, because we're going to try to get more than just that $100,000 revolving fund. But right now, that's all we have. So if you do the math, that's only enough for 10 to 15 shelf corporations, depending upon how much the client has paid in. So we need to act quickly. So the private lender is generous, offering 0% financing, but there are some requirements, as you would expect, because it is a loan. It is a loan. It is a loan. It's not a gift. Buying a shelf corporation is not a gift. Now, I would argue, kind of quote, it's almost a gift because if you look at the value proposition that we're providing them, it's crazy good. But the private lender wants to see that money be lent out and then come back into the fund so we can help more people. So let's talk about the requirements that the private lender is requesting. So, first of all, obviously, you need to get the client under contract, which is normal for a white label partner. If you don't know how to do that, get with Madison. And then you need to collect $1,000 down, which we've talked about many times before today, and I've mentioned already today. You keep half, you submit half to us. So at that point now, the client has some skin in the game. We have an executed agreement. We move forward. So that this is normal, regardless if the client's going to go through the private lender or elsewhere. Number one is normal. Then, which is also normal, is then we're going to send the client a funding app. It's a simple one-page app. There's no hard inquiries, and we're going to get the client funding offers from our consortium of lenders. When I say consortium, we're talking around 40, as I've mentioned several times before. Don't confuse funding that is available after they have the shelf versus what we're getting them now. This is their baseline credibility. We guarantee at least 100,000 when they go through the funding after they get a shelf corp, but we're not to that point yet, right? We're trying to get them into the shelf. So with that, if they get any cash offer, so we're talking about the requirements that the private lender has set up for this, I guess, guaranteed financing, we'll call it. The client must accept offers that they have been extended. That's important. So let's say the client got a $5,000 offer. Well, the client says, no, I don't want 5,000 because I need 10,000 to pay the shelf. Well, they've already paid 1,000 down, so they'd only need 9,000 technically. But they say, oh, no, I don't want the 5,000. It's not enough. If they want the private lender's money, the private lender is essentially doing kind of gap lending. The client must accept the offers that's been extended to them. Well, why is that? Because we have a limited amount of funding in this revolving fund. So we need people to accept what they do get extended so we don't drain that fund too quickly so we can help more clients. Also, if you have people that have imperfect credit, adding new trade lines is crucially important. That's how you build credit, right? If you had someone that had bad credit, you could take all the derogatories, all the negatives off, but that still wouldn't give them a really high credit score. They need to have credit lines, they need to have extensions of credit that report on their credit that show that they pay as agreed. So we need positive credit as well as a lack of negative. So what's my point? The point is, if they want to pull from that private lender's revolving fund, the client must first accept all cash offers. And I guess we should have been specific. All cash offers extended. Because what if they got an offer for 5,000 and an offer for 2,000? We add those together, that's 7,000. They've already paid you 1,000 down. We're farther along. That's added 2 new positive trade lines to the client's credit profile, and then we're draining less out of the private lender's revolving account. But as long as the client will do these three things, then the private lender will be able to pull from that revolving fund for the balance. So I expect Michael to ask this question. He's not asked yet. So I understand there's different scenarios. So let's go to this and put an asterisk, and let's look at what could happen. So once a client has completed an application, 3 scenarios exist. One is they get full funding offers. So they get more than enough extended to them to cover the shelf. They could get a lot more. In fact, they could get 50, 60, $70,000, which is obviously much more than the shelf. But there's only three scenarios once they've done the app. They either get full funding, which again just means enough or more than enough to pay for the shelf, or they get partial funding offers. And we see this sometimes. So they're receiving some money offers, but it's not as much as they owe for the shelf. So what did we say here? Rule number 3 is if they have number 1 or number 2, they have to accept it. We're not going to shove everyone, because otherwise, if we just made this available to everyone, everyone would say, hey, I'll skip this funding app. I just want to use that 0% financing from the private lender. Well, we'd burn through that limited fund in about a day or a half a day, and then we couldn't help the people we wanted to help. So that's the second scenario. So they either get full funding through one or more lenders, partial funding through one or more lenders, or it's possible, missed my bullet there or my dot there, didn't I? Or they might get no offers. And that's okay. So if they get no offers, that doesn't mean that the program's not going to work. It's going to mean that we need to go ahead and use a private lender for the balance of the shelf corp. And then by by getting the shelf corp into their hands, then we'll have a fundable business and we can help improve their credit for free. That's included. So let me stop rattling and start answering your questions. But I would ask if the questions are related to this, ask them. If they're not, let's set them aside for Monday, because I want to make sure that we have a real good recording for all of us to refer back to, because this is a big deal. We have some of you, let's take Alethea. Alethea referred in like 8 clients, and I'm pulling from memory, and I think only 1 or 2 of them received full offers. So in other words, there were 5, 6, 7, I don't remember exactly. They had partial. So this is going to help a lot for those of you that have clients that are not either paying out of pocket, which they can still do, or not getting full offers. We don't know until the application is completed. We don't know what kind of offers they're going to get. We don't know, right? So Charles is asking, well, why don't we start with the app? Takes time and effort to facilitate financing. We're not a loan broker. So we're going to help find financing for clients that are enrolled in the Shelf Corp and have paid their $1,000 down. If they want to go find financing on their own or just pay out of pocket, Charles, they could. All right, so who else has questions on the new private lender? All right, Sally's asking what the interest rate is. Sally, we've covered that. My fault, not yours. So it's not an interest grab. It's not predatory lending, but it is a safety net, a second chance type of lending. But it's meant to be for those that have exhausted all other offers. Otherwise, we're going to blow through this fund quickly. All right, Claude asked, no. Yeah, so Claude's asking a more general question, but the private lender, this revolving account, is specifically allocated for clients that are buying a shelf corporation from you that meet these requirements. This is not for them to go out and buy anything else or pay for anything else. It's just this. It's just this. It's for a specific purpose. It's a revolving fund that gets paid back so we can continue to use it. All right. Ronald's concerned about, Juan asked first, when does the private lender get the money back? Well, Juan, it's obvious, right? So the private lender is loaning the money to your client so they can pay for the rest of the shelf corp, and the interest rate is 0%. And so then once the borrower has paid back the private lender, then that money goes back into the fund so it can be used again and again and again. All right, hopefully that made sense. So I don't think this is not like some marketing piece of, oh, now I know this, it changes how I go market. I don't think it changes how you market or do your outreach. But for those of you who have clients that have signed a contract with you, that's step one, that have paid you at least 1,000 down, that's step two, that have completed a funding app, that's the third step. If they don't have enough offers, they don't have access to funding, to financing to cover the shelf court, now we have a new solution. So no, I think sometimes you have to understand, sometimes we're just telling you about the operations, not marketing. So this, I don't think this changes at all, other than maybe the exception you could say, hey, you can buy a shelf corp. You want to explain it ethically and legally and accurately, the benefits, which it'll sell itself if you do a good job with that, and then let them know, hey, it's X dollars. You're picking what the sales price is. However, we can get you started with just 1,000 down. You sign a contract with me meaning you, the private label, white label partner. They sign your contract. They pay you 1,000. We get the app to them, and now we can say, yes, we have guaranteed financing. Because some people were worried about this. They're like, well, wait, Corinthian, I don't know, I want to do this. I can pay you the 1,000 down. I can sign your contract, but I'm not sure if I'm going to get any cash offers, Corinthian. I got shitty credit. So now we don't have to lose those clients that are concerned about that. You can say, oh, no, 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 no. We've got like 40 different lenders that are essentially competing for your business. They independently will underwrite you. They'll make offers without any hard inquiries. And if you happen to not get enough financing, we have a new private lender who will take care of the rest. And no, it's not going to be high interest. It would be literally zero interest. So again, you can decide how you want to assimilate this and how to use this. But those of you that have clients that are stuck, clients that have paid the 1,000, but they didn't get cash offers, or some received cash offers, but they didn't accept them because they said, well, wait, it's not enough. Well, if they want to use this private financing, then they need to accept whatever offers they have on the table. Then we'll take them to number 4. And we communicate with these lenders, so they shouldn't be able to bluff us. So let's say that they apply and they're like, oh, I got declined for everything. Well, we have a direct data feed from those 40 different lenders. So if they're lying to us and they say, oh, I didn't get any, but we know that they did, then this is not going to be extended. If this was a bottomless pit of money, sure, we could just offer this to everyone right off the bat, but that's too good to be true. That's not the case. So if you have any clients that are under contract, that have paid the 1,000 down, that didn't get any financing offers, we need to act on it quickly. But if they have not accepted their cash offers, you need to work with Madison and get them back there to accept what's available to them. Okay, any other questions before we wrap it up? All right, great discussion. We will see you back Monday. Let Madison know if there's any assistance you need, and have a great day. Thanks, bye.